5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg brief. Let's get you set up for the day. Decision day in the US, futures wavering ahead of the Fed, with markets eyeing the possibility of a surprise rate hike. Microsoft, Meta and Qualcomm on deck after SK Hynix whipsaws down as much as 18%, up as much as 6% following results. And oil bounces after Iran attacks US bases overnight and Saudi Arabia joins the conflict with strikes in Iraq. South Korea experiencing more violent swings in today's session. Let's get straight to Winnie Su in Hong Kong for the latest from Asia. Winnie.
Yeah, good morning, Bonnie. A very volatile day, especially in the Korean market. We have the Kospi here closed down 6%, but during the day it was down as much as 13%, triggering a circuit breaker. Well, it was in fact the very first back-to-back circuit breaker from yesterday, so you can see that momentum unwinding very quickly. Well, the big trigger here is SK Hynix missing analyst expectation for its earnings and also raising capex expectation further. Now, the earnings call saw a little bit of a lack of details when it comes to the shareholder returns and the longer-term contracts. So some disappointment around that front as well. Now, we have just kickstart this emergency meeting by authorities, including the finance minister, on the current market situation around top of the hour. So we will see what kind of measures that they will come up with in the next 2 hours or so. Flipboard, we take a look at how that's affecting the broader Asia market, with the MSCI Asia down about 0.7% here, extending losses for a second day and also headed for its lowest level since April. The bright spot, though, is actually in Hong Kong shares. We are seeing tech shares gaining on that front, with rotation away from AI names and also some pressure easing when it comes to the memory chip pricing. Back to you, Bonnie.
So, Korea's finance minister calling an emergency meeting on market stability in South Korea. Winnie Su, thank you so much. Let's get to London now to see if there's much of a bleed across into Europe. Justina Lee, what's going on?
Good morning, Bonnie. Now, yet again, Europe is nowhere as dramatic as Asia, even though we are seeing the Stocks Europe 600 completely erasing some of the gains it saw earlier this morning to be down 0.2%. But we actually have gotten a spate of pretty good earnings out of some big European stocks, Deutsche Bank, UBS, Kering, and of course Glencore, which is supporting a lot of the mining stocks we're seeing here. Now, overnight, we've also gotten a bit of a flare-up of Middle Eastern tensions again, with oil climbing, and that explains, a rise in short-end German bond yields ahead of that Fed decision later today. But, I've been saying, a lot this week that, Europe has been the source of calm in global markets. And if you flip the board here, you can really see that in the year-to-date charts. I mean, Europe didn't enjoy that big run-up that we've seen in Asia with kind of the relative lack of tech names. But more recently, it also means it's been pretty resilient, holding on. And if we are seeing a bit of that rotation back into value names out of those high momentum names, Europe could be a relative beneficiary here, Bonnie.
All right, Justina Lee, thank you for that in London. Well, just to illustrate what Justina was saying, here is your oil price coming into this Wednesday Fed day. Brent crude above 87, so bouncing 3.5% plus on those attacks that were not expected by Iran overnight. That said, we're well off the $90 a barrel mark. New York crude just above 82. European gas futures rising again as well. The tech story, though, is a fascinating one today. You had SK Hynix, by any measure, blowing out earnings, massive numbers, and yet there is so much to parse in those earnings reports and in the South Korean reaction that it's difficult to know how investors will come into the US session. So we have Nasdaq 100 futures wavering just a little bit. We're positive now. We are definitely positive on the S&P and the Russell 2000. The equal weighted S&P hit a record yesterday, but the Nasdaq has had 5 down sessions in a row, and of course it's Fed day, so it's anyone's guess. Also, obviously, as we said earlier, Meta, Qualcomm, some of the major companies on deck with earnings today. Let's take a look at yields as we process what might happen with the Federal Reserve. About a 30% chance of a hike baked into this market. So obviously, if there is one, that would be a surprise to the market. The 2-year yield up a basis point. We're holding in around our levels that we've seen all week. Once again, the auctions yesterday showed demand at the very front end, less demand as we move to the middle and the back end. All right, let's get to some individual pre-market movers now. For that, we'll go back over to London and Chloe Melly.
Good morning, Bonnie. We are seeing some weakness across those chip stocks this morning, except for Intel, after The SK Hynix results really rekindled those fears around this potential AI overspending. And so we are seeing some weakness across that sector this morning. And we're down in particular for Marvel and SanDisk in pre-market trading. Moving on to Bloom Energy, which is having a great day today and soaring in pre-market after raising its guidance and reporting earnings that were double what was expected. So this is due to very strong demand from data centers. And so it seems that not all is negative in this AI trade. And finally, let's go over to Europe, where Kering in the luxury sector has reported very strong earnings and very strong sales, actually, for Gucci, which seems to indicate that the ongoing turnaround for that company is paying off. And we are seeing investors reward that this morning, with shares up almost 13% for Kering.
A nice pop there. Chloe, thank you so much. Chloe Melly there. We'll be back later in the hour. Also coming up this hour, the countdown to the Fed with Priya Misra of JPMorgan Asset Management. First, oil rebounding after the US said it intercepted a surprise attack by Iran on military bases. Joining us now from Dubai is Bloomberg's Abir Abu Omar. Abir, what happened overnight?
That's a good question, Vani. So this surprise attack by Iran on U.S. bases in the region. We also heard in the early hours of the morning here in Dubai from Jordan, with 5 missile attacks on its grounds from Iran. And so again, this follows a couple of days of calmness, really. The U.S. had halted attacks against Iran on Friday evening after 13 consecutive nights of hitting targets in Iran. Iran later on Sunday saying that it will suspend its own attacks on the region, only for us to hear overnight that it started by attacking those U.S. military bases. Now, Central Command did say that it intercepted the missile and that there was no damage done. But parallel to all of this, Vani, we also heard that the U.S. Central Command, alongside Saudi Arabia, have hit targets in Iraq, eastern parts in Iraq. We actually just heard from Iraq that there were cities, including the capital Baghdad, Kirkuk, Karbala, among others, that were hit with about 20 people killed, several others injured. Saudi Arabia says that this is an act of self-defense, that it was a response to those Iran-backed militia in Iraq hitting the country earlier in the week. So we're seeing new fronts really emerging in this Middle East conflict, Vani. But at the heart of all of this remains the Strait of Hormuz and the pretty much paralyzed movement there. And this is why you're seeing just across the screen now Brent crude prices 3.7% higher as we continue to monitor the movement or the lack thereof in the waterway.
Abir, thank you so much. Abir Abu Omar there in Dubai. Investors bracing for a host of AI-related earnings, then with a focus on capex spending. Earlier, shares of SK Hynix plunged and also rose after lots of numbers out of that company. Let's get straight to Bloomberg's Neil Campling. Neil, a 6-fold increase in quarterly profit, revenue that was literally up more than 1,200%. Sure, lots of capex and maybe not that much of a plan to give back to shareholders, but what's the logic for the trading here?
Yeah, so I think for Hynix, as you mentioned, it's travelled a long way in terms of the stock price performance, but raising their own capex by 50% this year, it follows a similar capex hike for the next fiscal year from rival Micron that we heard from late last month. So if their capex is going significantly higher, what is that going to do to the memory DRAM pricing longer term? That's going to be the concern for the investors of the memory stock specifically. It's actually, if you think of it longer term, going to be good for the hyperscalers, because out of the $1 trillion plus that hyperscalers are expected to spend on their capex next year, about 1/3 of that is actually going on memory pricing. So that could be a sort of longer term and actually a headwind that becomes a tailwind for the hyperscalers, which is not going to come through in numbers tonight, but something to keep a track on going forward.
As long as we don't see some slowdown in chip pricing power, are we starting to see that at all, Neil?
We are, so we're not yet seeing the memory pricing coming down yet, but I'll tell you what is coming down, and that's token pricing. If you look at the gap between the two, they have tended to track each other. So as token prices come down, it would seem that the memory pricing won't be able to sustain the kind of levels they're at the moment. So that could be something, I think, to focus on going forward as to where in that disconnect the balance comes out.
Now, we get Qualcomm later today. Last Friday, we already learned that it's planning on increasing prices for some of its products by double digits. What will investors be concentrated on in today's earnings?
Yeah, I think the key focus will be on unit volumes. And the reason I say that is because obviously us as consumers are likely to be kind of wearing those cost increases in terms of the price increases for products. And if we've already heard from Apple this year that that's going to be a challenge in terms of pricing, and that could feed through into the Qualcomm model in terms of those volumes. So keep an eye on the volume numbers tonight out of Qualcomm.
And Neil, we also obviously get Microsoft and Meta, two very, very different companies. What will investors be focused on a piece?
Yeah, so I think for Microsoft, clearly it's going to be the cloud growth. The cloud growth needs to be significant to justify what will be expected to be high in terms of their capex forecast. And as far as Meta's concerned, it's really balancing up, again, the top line growth with the capex investments. And it seems likely that actually Meta will follow what we heard from Alphabet last week, is it could well post the first free cash flow negative quarter when they report numbers tonight. So they're going to have to carefully balance those metrics of justifying the spend with accelerating top line growth.
Yeah, because we know what happened the last time this earnings season that a company reported negative cash flow. Neil, thank you so much. Neil Campling there. We're obviously also counting down to the Fed's rate decision set this afternoon. Bloomberg's Jill Desus joins us now for more. Jill, the market's really only pricing in 30% chance of a hike today, yet there have been voices in the last few days, perking up and saying this is a real possibility. What's the likelihood the market gets surprised?
Yeah, Bonnie, I mean, you're talking about how technically and the market's mostly pricing in a hold here. And so really it's that hike that would be the surprise, but that's not really what the vibes are really feeling going into today. This is actually more volatility than we've seen in terms of, that divergence between what the market's ultimately thinking in quite some time. By now, ahead of a Fed decision, you would think that the market will ultimately converge on one position. I mean, I think the one that really kind of, made everybody sit up and take notice this week was Citadel calling for a hike here. Obviously, a huge component of this is the fact that Kevin Warsh is still fairly new in the position, and he seems pretty adamant that he doesn't really want to give a lot of forward guidance about what the Fed's decision ultimately will be. But also, Bonnie, I think there's a lot of other elements that are really at play here. I mean, when you're looking over the past several weeks in terms of some of the price pressures, inflation pressures that we're really dealing with, we saw a lot of that cool off after the U.S.-Iran ceasefire was announced last month. But just in the past few weeks, we've seen, that ceasefire put on pause, then, come back again. I mean, we've obviously just heard some more reporting on some tensions that have flared up overnight. So that's introducing a little bit more volatility there. And then I think the other thing that you have to really think about here, Bonnie, is in terms of timing for a potential Fed hike. Does Kevin Warsh want to pursue something now or later this year? I mean, the closer we get to November, for example, the closer we get to U.S. midterms, suddenly a live Fed decision starts to look a little bit more politicky there. So I think there's a lot of equations that are really in play here, and it actually does make for a much more interesting Fed meeting coming up.
And Jill, while we may not get forward guidance, what are investors hoping to see from the new Fed chair?
Yeah, I mean, I do think that still kind of plays into it a little bit. I think we're all kind of still getting used to Kevin Warsh in the Fed chair seat and trying to get an understanding of where he's really kind of expecting the Fed to go this year. And again, I do think it kind of comes down to the question of even if the Fed, pauses again today, as we've been talking about, would be in line with the majority of market expectations for now. Is there any kind of, clues that you can kind of hint, from anything that Kevin Warsh says that, gives us some idea of whether or not there's a hike in play in the future. So still will be really interesting to see again how he just conducts himself in what's really only one of his first Fed meetings here.
Yeah, Market's just getting used to his cadence. Jill, thank you so much. Jill Desus there for us. Now to other top stories trending on the terminal this morning. BMW is offering voluntary severance packages to thousands of its workers in Germany. The move is part of a restructuring plan to create a leaner company. The departures are expected to account for most of the 8,000 positions BMW aims to cut globally. Hermes shares are falling after missing estimates for its leather goods unit. The company's CFO also said there will be lower product price hikes for 2027. While the numbers outperform much of the struggling luxury industry, a lack of growth in China is weighing on shares. Porsche's operating profit jumping, powered by the success of its high-margin 911 sports cars. The results are a relief for the struggling car maker. However, shrinking China sales, US tariffs and uneven EV demand continue to hurt the company. Coming up, strong results from some of Europe's biggest banks. We'll unpack the reports next. This is Bloomberg.
The big dispersion we see in equity markets the pressures and on energy prices creates potential headwinds on inflation, and that may turn out to be something that investors will not really like, and creating potential volatility. So I do expect spikes of volatility to continue for the rest of the year.
Sergio Armati there. UBS, Deutsche Bank and Standard Chartered all rising after the latest earnings reports, with billions of dollars in fresh buyback plans following revenue surges. For more, Bloomberg's Charlie Wells joins us from London. Charlie, it's a little bit like the United States, pretty much great across the board, yet many of Europe's economies are struggling. So where were the high points? Where did the strength come from?
Yeah, that's a really good point, Vonnie. And what we've really seen has been this combination of volatility and rates really helping a lot of these banks across the continent in a similar way that it did in the United States. So we saw this rate picture that really helps on that net interest front, which we've seen positive from a number of other lenders. And also what we've really seen this quarter has been that volatility, right? We've seen these equity trading desks at the like of UBS, which reported today up 53% in the quarter. You've seen them able to capture that volatility. But what you've also seen and what you heard in that interview with Sergio Armati of UBS is a note of caution. This idea that, are we at a point where we're at as good as it gets, given a lot of the threats out there, given the volatility, the fact that volatility is great for a moment, but it can also get to be too much. Rates as well, they can be great for banks' profit to one degree, but going too far can hurt them. So again, a little bit of a warning there, but right now, from these results and looking at the reaction from the market, very strong across the continent, just like it was in the United States.
Is there anywhere in the earnings across the board, Charlie, where we might be able to see the beginnings of some of those warning signs? Any little fragilities or cracks?
What was really interesting was to look at, fixed income, right? We saw some misses on fixed income at a number of these major banks here in Europe. So Barclays yesterday, and traders really kind of homing in on that. But you saw a show of force in fixed income from the likes of, say, Deutsche Bank, where, they had growth in the quarter of 16%, outcompeting their Wall Street competitors. The average from the major Wall Street banks was about 13%. So again, strong showing there. But if you think about where cracks could be, Vonnie, as you're talking about Deutsche Bank, there has been a big valuation gap in Deutsche Bank compared to a number of these other major European lenders. That's concerns that maybe things have gotten as good as they possibly can get. Concerns about Deutsche Bank's exposure to, say, private credit. And again, some concerns about the macro picture as well, Germany's slowing growth there. So again, as you say, some challenges in Europe, but at least for today, at least on the back of these earnings report, things are looking positive and investors are responding in kind.
And Charlie, just as you mentioned it there, there's obviously a whole different scenario in Europe than there is in the United States, but some of the macro pressures are still there, such as rising gas prices, a war on its doorstep, as well as a war a little bit further away. How are banks preparing for what might be another volatile quarter, but maybe not as helpfully volatile as the previous quarter?
Well, this gets to the point that, rates are actually helpful for banks until they're not, right? If we think about that inflationary picture, we are in this environment where rates are looking like they may be held or stay higher for longer. Another issue that we had going into this reporting season was, the price of risk. Were banks going to have to set aside more for potential soured loans than markets had expected? And if you look across a lot of these major lenders, there were not a lot of huge surprises in how much banks had been setting aside for potential write-downs. You saw less at a number of these large lenders. So at least right now, the picture is looking pretty strong here in Europe.
Bloomberg's Charlie Wells in London. Thank you so much. Coming up, a look at what's making headlines in your front page news. This is Bloomberg. Now for your front page news. First up, the New York Times reporting ICE arrests are surging in airports. Agents are arresting spouses of Americans, tech workers, and others whose visas have expired as they pass through airports. The Times says many of those arrested have active applications to stay in the country. Next up, the Financial Times reporting Mark Zuckerberg says the US administration should not block Chinese models to gain an edge in the AI race. In an interview with the FT, Zuckerberg expressed concern AI might become centralized in the hands of a few powerful groups in the United States. And the Wall Street Journal reporting New York City has published an online list of property owners who might be subject to the surcharge on luxury second homes. The list encompasses 960,000 properties and individuals from a cabinet secretary to President Trump's niece. The new surcharge, which went into effect July 1st, targets second homes worth more than $5 million. Coming up, we're going to push ahead to the Fed decision with Priya Misra of JPMorgan Asset Management. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Decision day in the US. Futures slightly higher, but wavering ahead of the Fed, with markets eyeing the possibility of a surprise rate hike. Microsoft, Meta, and Qualcomm on deck. This after SK Hynix whipsaws, down as much as 18%, up more than 6% in the Korean session following results. And oil bounces after Iran attacks US bases overnight and Saudi Arabia joins the conflict with strikes in Iraq. We'll start there, looking at Brent. Above $87 a barrel, so up almost 4%. Nevertheless, well off the $90 barrel mark. New York crude just below $82 a barrel. Elevated, but staying in position. European gas futures as well going to inflict a little more pain on that market. 58.87 per megawatt hour right now. Let's look at futures because it was a fascinating session. Free fall basically in Korea again, to the point where the finance minister decided to host an emergency market meeting on market stability today. Sentiment continuing to sour around the AI and chip trade. SK Hynix batted it out of the park, but upping its capex spending and just causing investors a lot of angst. And that stock was really whipsawing today. We're at peak earnings season in the US as well. We've nearly $6 trillion worth of market cap reporting today, another $8 trillion reporting tomorrow, and this after the Nasdaq 100 has fallen for 5 straight sessions. Right now, futures are positive. It may not be a sixth, but we'll see. The equal weight S&P 500 index is at a record as well. And then yields-wise, of course, all eyes on the Fed. Not too much movement, up about a basis point, just under 430 on the 2-year, still well above 5% on the 30-year, and the 10-year yield holding in at that 461 and change mark. Let's get to some individual pre-market movers now with Chloe Melee.
Good morning, Bonnie. We are seeing those chip stocks back in the green. So we've seen some initial weakness on the back of this capital spending plans from SK Hynix, which had really fueled those investor fears around AI overspending, this overinvestment in AI. But now we are seeing this reversal in sentiment, and the likes of Micron, SanDisk, and Marvel back in the green in pre-market trading. Some of that might have to do with some positive updates and results from some other names in the AI trade. And speaking of that, we have a Seagate, the computer storage and hardware company, beating expectations, with analysts saying that the AI cycle has further to go with this company, and therefore we are up in the green this morning, up about 5.5%. And it's also a similar positive story for Bloom Energy, which has raised its guidance and has also reported earnings that would double what was expected, and that was thanks to very strong demand from data centers, and we're seeing that really drive the shares this morning. We're up more than 11%, and so it seems that there are some positive stories around this AI sector, despite those worries around SK Hynix.
All right, Chloe, thank you so much. Chloe Melee there in London. Joining us at the desk now is Priya Misra, Portfolio Manager at JPMorgan Asset Management. Priya, you're not expecting a hike today, but how confident are you in that view? The last few days, have any doubts crept into your mind that we might actually see a hike, given the return to hostilities, the escalation in oil prices and so on?
Right. So I think conviction level has to be lower because the committee is divided. There's a lot of uncertainty around the war, around even whether tariff inflation has peaked. So I think there is that concern. And then we have Chair Walsh that doesn't believe in forward guidance, and he wants a good family fight. And the committee is divided. So I think conviction level is lower. But, I take a step back and I think about data over the last 6 weeks. And the data, whether it was the jobs data, whether it's wages, whether it's inflation, PCE, PPI, CPI, it's all come in a little bit softer. So if the Fed is truly data dependent and, they've got another meeting just 7 weeks away, I think they can buy time. They can reiterate the commitment to price stability. I think you're going to get a couple of dissents, 2 or 3 dissents. So that'll indicate that the Fed is very much focused on the fact that inflation has been above target now for a while. But the urgency to act today is a little bit lower. The data has been weaker, and they've got another meeting. I don't think we'll get any forward guidance that they are not going to hike or they're going to hike. They're just going to remain data dependent, which is why we ultimately think they don't go. But the market's going to keep these hikes priced in because the inflation backdrop just has been higher than that 2% target.
So how many, if any, dissents will we see, and what will they be based on?
I think the dissents are ultimately based on inflation credibility and the fact that inflation has been above target for a while. I'm thinking President Hammack, President Logan, very likely, maybe even President Kashkari. So you might get 3. And I think this is where Chair Walsh is likely to suggest that there was a good discussion of a hike, which is why I think the market's going to keep these hikes in there. If they don't hike today, well, they can absolutely hike, in September, in October and beyond. And so I think that's why the dissents are important to suggest that this is not just him driving the decision. This is a committee decision. So, I think the market's expecting 2, I would say 3. Now, it is a committee, it's a democracy. So I think if it's more than that, I think then the market does get concerned. And a sense of why the hikes. And, I know Chair Walsh doesn't want to give us forward guidance, but is this a hiking cycle? Like in our view, this might be taking out the rate cuts from last year, not a full-on hiking cycle.
Is there a risk that if they wait for the next time, or even the one after that they are missing the boat? Because sure, while this might be temporary in terms of the escalation of hostilities and oil prices and gas at the pump being back above $4 a gallon and so on, there are other factors too, such as maybe the wealth effect is coming off if we continue to see stocks sell off and less confidence in the AI trade.
Right. I'm glad you bring this up because I think it's the entirety of the issue. So the point that would it be too late? Well, I think financial conditions have tightened. You look at real rates. This move higher in rates has all been driven by real rates. And that's part of the tightening in financial conditions. Then some of this optimism around the AI trade, more capex is always good news. No, I think the market's now looking for monetization, use cases, things like that. So I think some of that wealth effect might be, coming off. And again, I look at inflation expectations. Whether you look at break-evens, surveys, the Fed has credibility, without hiking right here. Now, I think, does that credibility go away if 6 months from now inflation's still here? It can start to wane. But I think right now the market's giving the Fed benefit of doubt that they would hike if inflation has not peaked. Our view is inflation's likely peaked. Energy might still remain high. Oil prices might stay at this while, but it's not going to be a source of inflation, and the labor market's not a source of inflation.
And the consumer seems resilient, at least according to many of the companies that we've heard from Hilton to Royal Caribbean.
Right.
Is there a risk of upsetting the market if the Fed hikes today? So even if the Fed chair were inclined to potentially hike today, this market seems a little fragile right now.
It does. And I think the tricky part is if they start hiking, is the hike primarily because inflation's above 2%? That's what, if you listen to the hawks, that's their argument. Well, then why stop at 2 or 3 hikes? And so the market has to broaden the distribution of maybe this is 4 hikes. Are we taking out the rate cuts from 24 and 25? I think that's why I think the market's a little vulnerable. Without a dot plot, without getting much forward guidance from Chair Walsh, I think it's just the concern. Risk premiums will rise. And that's obviously important for interest rates, but credit spreads, equities. So this is why I think the market is vulnerable. A hike without telling us the end point or even giving us a sense of the reaction function. That's what I'm hoping we get a little bit of. We need not get forward guidance. But what exactly is the Fed overall looking for in terms of how much more are they going to hike? I think that's what we'll be looking for if we do get that hike.
The Treasury auctions that we saw this week, what did they say to you? We had plenty of demand at the very front end and, even maybe out as far as the 2-year, and then not so much.
So, I mean, they were not terrible, but there was that little bit of a tail. And I think it's telling us that there is a competition for capital. Globally, from sovereigns, energy independence, just energy security, things like that with the different conflicts. You also have now competition for capital from the AI-related debt boom. The AI party has come to the bond market, and I think as supply comes in, high-quality companies issuing further out the curve. Now we've got global sovereigns issuing. You have all the hyperscalers and the entire AI ecosystem issuing, plus U.S. Treasury issuance. I think that's where the competition is coming in, and people have to see the value in treasuries relative to some of these really high-quality, AI companies.
One of the reasons cited for the AI trade coming off has been that hyperscaler debt has been getting just a little bit more expensive, right? But that's also a factor of just the amount of issuance, and if investors are going to continue to take it on, they're going to want to get paid more. Have you at all looked at some of these offerings and how much more complex they're getting? Would you be interested at all?
We find value across the AI ecosystem, as we're calling it. So it's not just the hyperscalers, it's chips, it's power. And to your point, they're being extremely creative, which I think is the right thing to do. Because if they have that much in funding needs, just straight up unsecured debt, you might exhaust the market. So whether it's an SPV type structure and then paying us for different risks, if it's a construction risk, if there's amortization in the schedule. So there's a macro view that these companies are strong. We think the AI trade is there. But then there's a lot of under the hood. Are we getting paid for all the risks we're taking? What spread levels? How much more supply is there? Absolutely. We love some of the AI related debt, but you have to be very careful in terms of what you're buying.
Well, that made you so happy, Priya. There must be a lot of opportunities out there. We have to leave it there, but thank you so much. That is Priya Misra of JPMorgan Asset Management. Now to other top stories trending on the terminal this morning. UBS announcing a $3 billion share buyback program. Wealth management assets beat estimates and trading revenues surged. CEO Sergio Ermotti spoke with Bloomberg TV.
Standout is good momentum across all our businesses. You can see that in 45% increase of our underlying PBT, and so basically the synergies and the top line developments are working well, and net assets are up 7.3 trillion of assets. We manage good inflows, and the integration is almost done. Still not fully done, but I'm very pleased with our momentum.
OpenAI says the AI models that hacked Hugging Face also accessed a customer account on cloud platform Modal and used it to launch attacks. The hack is reinforcing fears that AI models are becoming increasingly capable of carrying out sophisticated cyber attacks. The US is tightening restrictions on some foreign-made robots and solar power inverters. The FCC says the products pose potential supply chain risks. The move could add to tensions between China and the US ahead of the Trump-Xi summit in September. Coming up, military strikes flare up again in the Middle East. More on Washington's response next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Tensions flaring again. A pause in military strikes in the Middle East disrupted after what the U.S. called a surprise attack from Iran on American forces. Bloomberg's Megan Crane is live now from Washington. Megan, is this the first time that Iran has attacked U.S. bases preemptively?
It's not. There have been flare-ups in that conflict over the last several months. Unfortunately, when I left yesterday, we were talking about gasoline prices and oil prices had plunged after a lull since Friday, and that seems to have dissolved overnight, really showing how far apart the two sides are in trying to come to a lasting ceasefire, lasting peace in that area.
Absolutely. The U.S. calling it a surprise attack was also obviously means that they were not prepared for something like this, or at least they didn't see it coming, let's put it that way. How would they not have seen that coming? I mean, there must be some breakdown in communications with the mediators.
Yeah, I'm not really sure how that would have come about. They certainly said that they were prepared for it in the sense that it was unsuccessful. There weren't a lot of details as to what the attack was, where they were headed. But I think that, until we have a peace deal, there's always going to be some sort of skirmishes and some threat that there could be violence.
Trump also saying yesterday that he had good meetings with other world leaders, Volodymyr Zelensky and Benjamin Netanyahu. Any more details on what the US might be providing in either case?
Well, for Zelensky, he certainly was happy that yesterday the United States, or the Senate, passed a sanctions bill that had been something that Lindsey Graham had been really anxious to push forward. That would allow increased sanctions on purchasers of Russian oil and Russian energy more generally, which is something like a tool that Zelensky was definitely looking for. So they didn't come out and say that that was what he, had gotten yesterday, but that he definitely left with that in hand. As far as Netanyahu, he came out and said that they had had a good meeting, but they didn't give a lot of details as to what they had talked about. He did say that he was in lockstep with the United States and whatever Trump decided to do with Iran.
Yeah. Megan, just domestically, a brief word on the Trump administration deciding to end the drug plan subsidy for Medicare. It seems like it might be a difficult message to put across if you're campaigning for midterms.
It is that for sure, right? The Trump administration is sort of serving two interests. They want to talk about cutting prices. They want to talk about cutting costs. And the billions of dollars of subsidies are one thing they can say that they have done that. But that could raise prices and costs for consumers, which is something that's really not popular on the campaign trail. So the timing seems a little strange to me, but that is, how they've decided to do it. And I think it kind of shows how they really are struggling to come up with a message that serves both interests.
Yeah, absolutely. Megan, thank you so much. Bloomberg's Megan Crane in Washington, D.C. Turning back to tech now, the latest results from SK Hynix reinforcing investor concern around AI spending ahead of more earnings in the United States. The South Korean chipmaker expects its capital investments to increase around 50% to at least $31 billion. Joining us now is Mandeep Singh of Bloomberg Intelligence. Mandeep, surely we were expecting this, right? The market was expecting that capex would be at this level. Why is the volatility so strong in those shares today? There was so much good news in that report.
There was, but when you look at the numbers relative to where consensus expectations were, they probably missed the top line by 5%. So it was surprising given the US ADR listing. But I can see why they don't want to, be in the news about the price increases on the DRAM side, given companies like Apple have already raised concerns about, higher memory prices and the impact that it's having on them. So from that perspective, I think they want price increases to moderate on the DRAM side, and that's probably played a role in terms of why the numbers were shy of consensus.
Speaking of pricing power, Qualcomm is set to report later, and we already know it's increasing its pricing for some products by double digits. What more will investors want to hear from Qualcomm?
I mean, all these companies, whether it's Qualcomm or Apple, they're at the receiving end of, the higher component prices, such as memory. And so from that perspective, I think the impact of higher memory prices on Qualcomm's margins is what I think everyone would be looking forward to. And also the feared demand destruction when it comes to, raising prices that Qualcomm is doing. How it's going to impact the unit volume. So I think the consumer side right now feels left out because of all the focus on data centers, and Qualcomm is getting into data centers, but it's a much smaller portion of their overall business.
And we should get an update on that as well. We're kind of getting all sides of the picture today, though, because we're also getting results from Microsoft. What are we expecting to hear about Azure and some of the other aspects of the business?
Yeah, I think the bar is very high for Azure, given what Google reported last week. And we know everyone is expecting both Microsoft and Meta to raise their CapEx numbers, and not only for this year, but also have some guidance for 2027. And some of the memory price increases is what will drive these CapEx increases as well. So if they don't raise their CapEx, that would raise a concern that, they are cutting back somewhere else. And I think everyone is fixated on the top line growth, but also the CapEx growth for both Microsoft and Meta.
So Meta will also hopefully give investors a steer on how it's going to monetize its compute, the leasing of its compute. Will we get details, do you think, Mandeep?
I think so. And if they don't give any details around, how they're thinking about the cloud business or how their latest Muse Spark model is doing relative to all the frontier labs and still raise their capex, I expect a negative reaction. But look, they've released a new model, Muse Spark. It seems to be doing well on certain benchmarks compared to their prior Llama models. And so from that perspective, expectations are low, and any details they provide both on the cloud rental side as well as the model side, I think would be cheered.
And then after all of that, we go back to Korea and we actually get Samsung earnings tonight. Obviously, it's a little bit more diversified than SK Hynix, but I mean, will it rescue Korea, Mandeep? Obviously, there's an emergency meeting happening right now as well.
Yeah, at the index level, there's a lot going on in terms of margin calls and other things in that market. But when I look at the fundamentals of these businesses, whether it's SK or Samsung, they do look very strong. And I expect these companies to generate a lot of free cash flow and probably, once they're done with all the local concerns, then probably pursue some buybacks as well. But these companies will generate a lot of free cash flow over the next 3-4 years.
All right, it's going to be an absolutely insane 48 hours. Mandeep, thank you so much. That is Mandeep Singh of Bloomberg Intelligence. Coming up, a Fed decision and earnings front and center in your day ahead next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. First up, the Fed's rate decision coming at 2 p.m. Eastern, followed, of course, by Fed Chair Warsh's news conference at 2:30. Then a raft of earnings. We get Microsoft, Meta, Qualcomm, ARM. They're all after the market close. And then you got to stay up for Samsung out of South Korea. Plus, Starbucks, P&G, Chipotle, General Dynamics, they're all reporting after the close as well. Some earnings movers for you. Let's start with Seagate. A large gain here. Strong results and a revenue forecast, so bucking the trend there. Not so much for Logitech, down almost 10%. Its devices sales forecast really missed estimates for the second quarter. Some supply bottlenecks there, and that stock is down 10% now in the pre-market. And then Bloom Energy, well, it was down 11% in yesterday's session and has been lower in the last few sessions. But investors were pleased. The fuel cell maker surging on higher guidance. Earnings actually doubled estimates. Let's look at the macro environment as we head into this whopper of a trading day. So Nasdaq 100 futures are actually climbing all the while, even after a spectacularly volatile session in South Korea, which caused an emergency meeting on that market. Looks like perhaps the selling might be done. We have had 5 straight declines for the Nasdaq 100. Gold just a little higher, and the 2-year yield just up a basis point as some parts of the market tread water before the Fed rate decision. Oil, though, is higher, up more than 3% on Brent and WTI. Also, European gas futures up almost 3%, back at 59 euros per megawatt hour. That is it for Bloomberg Brief. Surveillance is next. This is Bloomberg.